What I'm about to show you, think tanks spend millions, tens of millions of dollars on. Artificial intelligence computers crunch these kind of numbers I'm about to show you. And no, I'm not exaggerating or making it up or trying to be grandioso. The kind of information you're about to see, people pay millions of dollars, tens of thousands, hundreds of thousands, millions of dollars, and they're aware of it. That's why the Federal Reserve, the committee members sold all their shares at the peak. They're aware of the cycles. They're aware to one extent or another of the numbers I'm about to show you. What I'm about to show you is life-changing for some of you if you make good use of it. All right, let's dive in. Here you go. If you're smart, well, you'll come back and watch this video a bunch of times. You'll pause it, look at the numbers. You'll ponder what you're looking at, what's in front of you. What does it all really mean? What the heck is this spreadsheet all about? Where did I get all this data? Did I just download it from some think tank? Did I break into Fort Knox? Did I bust into one of the highest, biggest, smartest think tanks in the world and downloaded their data? No. This is my research. And for those of you that have been watching, and those of you that are new, I advocate studying patterns. I advocate mathematics. I advocate geometry and trigonometry. I advocate you take the time to study these disciplines because they will help you tremendously in everything you do in your life, including trading. All right, so what is this? What is this whole spreadsheet about? I want to give you just a top level of what this spreadsheet is about, and then we'll dive in a little bit to the details and what's going on here. This is the Dow Jones Transportation. The majority of this spreadsheet is the 75-month cycle. Yes, it exists. Yes, it's real. It's not conjured up or made up. The Dow Jones Transportation is the oldest index in the United States of America, perhaps one of the oldest in the world. There are others, but when it comes to stock market, if you will, the Dow Jones Transportation goes all the way back to 1902, maybe even a little further. 1902. You know, before I dive in even to the high-level view, I want to just share some with all of you. As I was doing this analysis and been working on this for quite some time, weeks, maybe a couple months even. My mind was locked into the times. The dates you see on the spreadsheet, some of them are really old. Some of these dates go back nearly 120 years. Got some hot rods going down the road. Gotta love Texas. 120 years. And I thought about the times, as I spent a lot of time on these specific dates and going through the analysis, and I could remember horse and carriage. No cars, they didn't exist. I can remember a time where there really wasn't any electricity. There were lanterns, oil lanterns, and wicks. And people only burned those lanterns only when they absolutely needed the light because they didn't want to waste the oil. Back in the early 1900s was the beginning of the industrial age. It was only 3 or 4 decades removed from the Civil War. As I looked at these dates and pondered back, my mind was locked into the time of what was going on in the world at that time. It gave me an insight, a perspective, a an appreciation of what our forefathers, our grandfathers and grandmothers, and our great-grandfathers and great-grandmothers, of what they did, where they lived, and how this nation was built on their shoulders. And many nations all across the world, for those of you that are watching and listening to this video, it's the same thing. Brazil, Japan, Russia. Isn't just the United States of America, all over the world. By the way, there's translations for many of the languages, so for those of you that want to see the translation of this video in your own language, just click the little translation down there and pick your language. There's a bunch of them in there. Okay, Dow Jones Transportation. That's what this spreadsheet's mostly about. At the bottom, you see some S&P 500 data, and we'll get to that in a minute, in a little bit. So what's this all about? This is about the 75-month cycle that exists. Starting back in 1907, if you look at down there on column A, all the way to row 22, 1907. The ideal cycle low in column B, and the actual cycle low in column C. Column D is the difference between the actual cycle low and the ideal cycle low. How far off was it? If we're on this channel, I've talked about it many times, but for new people on this channel, we predict and forecast the market. And a lot of people say, that's not possible. You know what? I reject doubters. I'm not interested in doubters. Just get away from me. I don't operate in doubt. So column D is the difference between the ideal cycle low and the actual cycle low that occurred. And most of them were really close within a few months. A few of them were way off, usually during times of war. Column E was the actual high, the cycle high, the date or the month, because this is monthly data, guys and gals. We're not looking at days or weeks, looking at months. Because on this grand of a scale, you got to look at it in a monthly time frame. Column F is the length of the event in months. What event am I talking about? I'm talking about the decline from the peak to the valley. These are huge events. Look at them. 14 months. Column F, stay with me on this. 10 months, 46 months, 2 months, 14 months, all the way down. You can see how many months these events happened. How many months did the event last? From peak to trough. Column G is the start price of the event. Column H is the end price. I is the difference in price. It started as in G, it ended in H, and we get a difference. Simple mathematics, arithmetic. How many haven't heard that word in your lifetime? How many people haven't even heard the word arithmetic? Talk about a change in time and the things we've lost. J is the event difference or the decline difference. Just look at those numbers. Look at those percentages. They're huge. The least of which I think is 8% and only happened once. Another one's 16%. All the rest are 30% or higher. And as I was looking at this data, and I'd only gotten up to the column J, and I was about to publish the data, and I said, wait a minute, let me think about this. And I started to look at the run-up. That's what column K and L and M are. They are the run-up. So you get the peak, you get the decline. But what about the run-up? The prices that ran up to the peak. So that's what K, L, and M are. So there you go, from 1907 all the way through 2015. If you look at some of these dates, it's going to amaze you how reliable it is and repetitive it is. I'll even show here when I get done with the spreadsheet, I'm going to show you how this cycle, the peak, has already happened for this cycle. The 75-month cycle peak has already happened. The Dow Jones Transportation, it just hasn't shown up in the S&P 500 yet, but it will. Oh, yes, it will. And when it does, it will not be small. Most likely. Okay, let's look at column N. Column N as in Nancy. Row number 5, 54%. Row 6, 94. I'm all the way to the right. Just for those that are trying to keep up, I'm all the way to the right near the top right-hand corner of the spreadsheet. 54.24%, 94, 104, 40, 96. Look at these percentages. What is that? That's the decline to the run-up ratio. And why is that important? It's important because we don't know what the decline for this current event is. It hasn't finished yet. But if we can look at historical data and look at the run-up to the decline ratio, which I didn't call it decline, just called it an event, then that helps, right? We could look all the way back from 1907 or 1902 all the way through 2015 and the 75-month cycles, and we can look at the price, how it ran up in the 75-month cycle, and then the decline that came after it. That's what that percentage of column N as in Nancy represents. Now let's come down to row number 24, 25, and 26. It's kind of near the bottom on the right. You'll see average without 3 highs and lows. What does that mean? That means I went along in column N, I took out all the 3 lowest averages and I took out the 3 highest averages, and then I took out the 3 lowest percentages, the 3 highest percentages, and then I took an average of the remaining numbers. If you're not sure what that means, pause it, rewind, listen to it again. For those of you that are not strong in mathematics, now you know why it's important to be just that. It's important to study. It's important to know your mathematics and other disciplines, chemistry. I could go on and on and on. I said it before, don't be lazy. So that one, in row 24, that average, 72.77%, is probably a pretty good average. We stripped out the highs and we stripped out the lows. The extreme highs and extreme lows were stripped out, and this is the average you got, 72.77%. What does that mean? That's the decline, the event, or the decline to the run-up ratio. Yeah. And then the one below is just a straight out average, 93.16. That's just everything without taking out the highs and lows. And then I also mentioned the lowest there, which would be the least scenario. 37.25% is the least of the declines that we've had ever. That's already huge. It's already huge. Even if we just got that little itty bitty 37.25%, that's already huge. Okay, column O. Stick with me on column O, row 24. You see a number there, 9,119.41. The one below it is 71.44. The one below that is 12,560. Right? What are those numbers? Those would be target numbers, expected target numbers at the bottom of the decline for the Dow Jones Transportation. That's what those numbers are right there. Those 3 numbers. If you want to take the least of then the least of it, that would be row number 26, column O. The Dow Jones most certainly will come down to 12,560. Dow Jones Transportation now, guys, not the industrial. Don't confuse the two. My phone's talking to me. So where's the Dow Jones? Well, where did the Dow Jones Transportation start? 16,170. The minimum will come down to 12,560. Let me get over to my TOS platform real quick, which I'm not necessarily going to show, but I just want to see something really quick while I'm talking to all of you here. Where are we at right now? We're at 14,473. So you could expect 2,000 more point drop from the Dow Jones Transportation Minimal. I think it'll be much more than that. Okay, so why did I use the Dow Jones Transportation? Because it's the one that goes back the furthest. This S&P 500 only goes back, the data I could get for the S&P 500 only goes back to 1984. That's why I didn't use it. I wanted to see all the history as far back as we could get it, 120 years. Because it starts in 1902. 1902. So, now look at the very bottom of the spreadsheet. We can take this data from the Dow Jones Transportation and we can translate it, right, and approximate the S&P 500. That's what the very bottom of the spreadsheet is. Okay? If you just want to get right to it, the bottom right-hand corner. Those are the target prices of the S&P 500. There they are. Take your pick. If you go with the least of them, the target price will be 3,664. That's an 884 point decline. 3,664. Where are we at today? Let me go back. We're at 4,424. Okay? But from the high, that'd be an 884 point decline. Do I think that's the most likely scenario? Probably not. We're probably going to get something deeper than that. I'm not saying it's going to be 72%. I don't know. It could be 40. It could be 50%. I'm just presenting the data based on the analysis that's been done. I think bare minimum we can expect 3,664. I think it'll be deeper than that. Now, I can just hear everybody saying when. You need to pause this video when you're done watching it and just stare at the screen for a while and look at the numbers. Because the win, it's not a win. It isn't a one-day event. You got to get that junk out of your mind. We don't just trade a day. These are massive events that stretch over months, sometimes years. But one thing is for certain, and I'm 100% sure of this. We've already hit the high in the Dow Jones Transportation, and we've already hit the high on the S&P 500. Certain of it. It happened in September. Do not expect to see any more all-time highs in the S&P 500. If we do, they're going to be not much. They're going to be right around what we already saw, 45, 49, 50. Now, of course, the manipulators, the Treasury, the Federal Reserve clowns that already sold all their shares at the peak, as they manipulate the market and set policy, criminal crooks. That's what they are, crooks. They should all be thrown in jail. I could think of some nastier things to do to them, but I won't say it on YouTube. Don't expect to see any more all-time highs, guys and gals. Probably not going to happen. If I'm wrong, I'll admit it. I was wrong. No problem. Dow Jones Transportation has been having declines for the last 3 or 4 months. Back in May. Go back up to the column E, the very top of the spreadsheet, column E, where it says date of high. Just scan in that column from top to bottom. Look how many times you see May. I see 1, 2, 3, 4, 5, 6, 7. 7 times. 7 times out of, what do we got? 17 cycles have occurred since 1902. Half of 17 is about 8. Maybe a little more. 7 of that, almost, 45% of the time, May has been the high of the 75-month cycle. Almost half the time, May has been the high of the 75-month cycle. And the Dow Jones Transportation, as you're going to see here in a minute when I get done with this spreadsheet, I'm going to show you where the high was for the Dow Jones Transportation. You don't need to figure it out, right? I wouldn't be talking about it. We all know what month it happened in, right, everybody? What month did the Dow Jones Transportation's 75-month cycle high occur in? You guessed it, May of 2021. It already happened. And it will continue for quite some time. The decline will continue. Remember, Dow Jones Transportation minimum decline target price is $12,560. The minimum for the S&P 500 is 3,664. 3,664. Remember that number because that's the bare minimum. It'll probably be deeper. All right, before we go on to, I'm going to show you the Dow Jones Transportation and show you that chart. Go ahead and click the subscribe button. Make sure you give me a thumbs up. I really appreciate it. And don't forget to click the little bell to be notified of all the videos as I put them out. All right, let's get back to the video. Let's look at the Dow Jones Transportation. I'll wrap this thing up. I haven't taken a screenshot of this, but I will before I put the video out. There you go. Far hand right of the screen. What are you seeing in the Dow Jones Transportation? Look at the high. 16,170. What month did it happen in? May. Where are we at right now? September. Look at the candlesticks. Three out of the four were red. The one that was green was barely green in August. Could this be all there is to it? Maybe. I'd have to look at the ratio. The high was 16,170. I could do that ratio real quick on the spreadsheet. I probably won't put it on the spreadsheet for the video, but I'll put it on the spreadsheet and talk to you about it. The high was 16,170. Bear with me while I do it. Okay. And where are we right now? We closed, well, the low was 13,946. 13,946. Let's get an approximation. 14%. The Dow Jones Transportation up to this point, from high to low, since the event started, is about 14%. And we know that the least of these events has been 37. So it's not over. Okay? 14, 24, 34 is 20 plus another 3. Okay? 23% more to go, minimum. 23% more decline to come for the Dow Jones Transportation minimum, and it'll probably be more. So we're not done. You can see it right there. It's as clear as day. The Dow Jones Transportation decline already started back in May. The S&P 500 just started in September. Get ready. It's going to get worse. A lot worse. And the clowns at the Federal Reserve and the Department of Treasury and BlackRock, I know they're never going to probably listen to my video, but if they do, you can all kiss my ass. Damn criminals. And America and the rest of the world deserves better than you clowns and goofballs. You know, I'm an advocate of free markets. I like capitalism. For those of you out there, socialists and whatever else, well, I don't agree with you. That's your choice, and I got mine. I'm sticking with mine. This ain't over. We may, on a day-to-day, week basis, yeah, there's going to be ups and downs and greens and reds and all kinds of opportunities to make money. But you can bet your bottom dollar there is more price decline to come. And I mean lots of it. We're not even anywhere near the sea of red and blood. I talked a couple weeks back, whatever, a week and a half ago, I said bloodbath. There's going to be a sea of red. Sea, as in huge amounts of red. gonna make go back to October through December of 2018. It's gonna make that look like chump change. All right. I've done enough. The video's getting long. Hope you enjoyed the video. Don't forget to subscribe. Click that thumbs up. Appreciate it. I know you're not seeing this kind of analytics anywhere else, because no one else is going to publish it. But you're seeing it on this YouTube channel. If I want people to succeed, I want them to do well. I want them to know the truth. Don't forget to click the little bell so you get notified of all the videos. We'll talk to you all real soon again next time.